I'm at REIT World 2012 in San Diego, and joining me today is Frank Haggerty, Portfolio Manager with Duff & Phelps Investment Management. Thanks for joining us today, Frank.
Thanks for having me, Krista. Good to see you.
How have your clients' perception of investing in REITs changed over the years?
You know, that's a great question. If I think about it, there's really three key areas where clients' perceptions of REITs maybe have been enhanced or changed over the last few years, given the market environment that we've been dealing with. And what I'd really focus on is really, the liquidity aspect of REIT shares, just the quality of the assets, and the cost of capital competitive advantage that the publicly traded companies have. And so liquidity obviously has always been a big part of the REIT story relative to just private real estate investing in general. But I think a lesson learned over the last few years is just how important that liquidity can be, both from the buy and sell side. So that's definitely grown in appreciation. The quality of the assets, that's been a distinct advantage to the publicly traded REIT industry over the last few years. You've seen that, the quality of their assets, the asset base hold up much better. The returns from those assets do much better than just broader commercial real estate. And then, thirdly, the cost of capital advantage. It's clearly been a great advantage that the public companies have had relative to private real estate industry over the last few years, and continues to be, very well appreciated by our clients investing in REITs.
With new development gradually coming back in the apartment sector, which sector or sectors do you anticipate will see new development next?
I definitely think we'll see development in moderation across a number of sectors in the coming years. Clearly, the supply side of the equation has been a strong tailwind to the publicly traded REIT story. We've seen very minimal amounts of new supply across most of the major property types. Obviously, apartments have gotten their fair share of press as it relates to new development, but clearly relative to historical levels, the amount of development we're seeing even within apartments is fairly minimal. So we will see new development in areas such as retail, industrial, and some of the specialty areas. Factory outlets is another area, data centers. So we will continue to see new construction taking place across the industry. But the point I would make is it's going to continue to be very disciplined. The access to new construction financing remains very difficult, except for the best sponsors out there. So you're not going to necessarily see a big wave of merchant building activity that we've seen in the past. And so we will see development. It will be more demand driven and disciplined, which I think is an important point to make.
Are there any economic indicators that we should have our eye on, aside from jobs, that may particularly impact REITs?
Sure. We all like to talk about a lot of the demand side economic indicators, those drivers for space, drivers for occupancy. One that I think is very important as it relates to investing in REIT shares is relates back to that cost of capital equation. So, it's not necessarily thought of as an economic indicator per se, but really when you look at, the bond rate on investment grade bonds and where those are trading, either in the absolute sense or relative to 10-year treasury rates, I think is something very key for investors in REITs to focus on. Investment grade bond yields are at near historic lows. You'd have to go back all the way to the early 60s, late 50s to find a comparable period of time where the cost of capital, debt capital, is as low as it is today. And so that's something, real estate is a capital-intensive business, and so that's something for people to be mindful of and to focus on. And right now it's a strong tailwind, and we hope it stays that way going forward.
Thanks so much for joining us today, Frank.
Thanks for having me, Carissa.
I'm Carissa Chappelle for REIT.com.